like that cube.
Yes, it is.
Yeah, that's cool. Yeah.
Calling our workshop to order at 4:30 p.m. Thank you all for coming to attend the workshop to be informed about our latest audit report. At this time, we'll open to our city manager for any comments.
Thank you. We want to thank James Moore again for coming out and meeting with our commissioners. They met with them earlier on one-on-one basis to try to give them some updates and talk about some of the areas in the city. We think the city has come a long way, and you'll hear that in the report that both Zach Collifer will do, as well as Ben Clark. And they came and stayed with us a couple of days, and we were able to give them hopefully everything that they needed. First, let me thank Kiki and all of her staff for doing an outstanding job of just working with the auditors and making a very smooth process. As you know, just because auditors come, that doesn't mean that our jobs stop. We have to do that on top of making sure we get them everything that they need. And I just want to say a big thank you to the finance department and all the other departments that played a part in this audit. So I'm going to ask Zach if you'll come forward and go on and start your presentation.
All right, good afternoon. Zach Shalafor, partner, James Moore and Company. Also joined, as you mentioned, by Ben Clark, who is the manager on the audit. So as we referenced, we have met with everyone, take a little deeper dive, but still want to hit the highlights as a group and go over the audit findings as well as the overall financial position and trends of the city. Overall, both qualitatively and quantitatively, the theme of the story really is the city moving in the right direction, both on the audit comment front, some improvement there, and then on the financial side, those numbers largely speak for themselves. We'll go over those there to look at the general fund trends as well as the disaster recovery fund and the business type proprietary funds. Before we get started, I also would like to thank the Commission for the opportunity to work with the city. This is our third year now performing our external audit. And a big thank you from our perspective as well to Kiki and the finance team. It's a lot of work that goes into the audit. Of course, year one, we were on an extended time frame just based on the timing of that proposal process. But this year, back on schedule, the same meeting date, effectively fourth Tuesday. In March, a little more time to spare this year. Last year, I think we kind of came down to the wire a day or two before. This year, almost an entire week. So just, everything we see is kind of evidence of that moving in the right direction in terms of the process and working through this experience with staff as well. Oh, okay, so I did not check it, but we are working. So these are management's financial statements that are presented in the final document. There are 5 reports that we issue that summarize the results of our audit and audit procedures. The first report that we issue is the independent auditor's report on the financial statements. We did issue an unmodified opinion, which states that the financial statements are fairly presented in all material respects, effectively that the numbers can be relied upon, and this is the best report that we can issue and what you would want to see in this first report on the financial statements themselves. This year we did perform a federal single audit. The city did not meet the threshold for a state single audit. Compared to the last 2 years, kind of as some of that grant funding activity related to the hurricane slows down, the city fell below that threshold, and the only federal grant program that was over the threshold for testing was the FEMA dollars, and effectively there we perform a mini compliance audit, so to speak, over the use of those funds to determine whether they were spent in accordance with the federal rules and regulations related to the use of FEMA funds, and we had no matters to disclose there related to compliance with those applicable rules. The second report is on internal control and compliance, where we are required by government auditing standards to look at the city's internal controls and compliance matters, whether it's related to debt, budget, or other grants that are not tested as part of the single audit. And any internal control or compliance matters that come to our attention during the testing would be reported here. There was one comment reported, as has been in prior years, related really just to audit adjustments. If in pulling everything together for this report, which is a much different process than your normal operations or month-end close, if we have adjustments, though, or changes to those numbers to get everything in the proper accounting period and close everything out for reporting purposes, we have to disclose that as an internal control deficiency to say, hey, these numbers, there were changes from what was there internally to what's in this report. But I do just want to highlight the fact that by no means, it's kind of one expected from our standpoint, regardless of the staff, so it's not at all any reflection in a negative manner of the staff. As I mentioned, they do a great job, but with all of the complexity related to receivables from FEMA, timing of payables and expenditures, and getting everything again in the proper accounting period. Again, not a surprise from our standpoint that we do have that and have to report that. But again, it kind of goes with the territory, again, largely given the complexity where we have to spend a lot of time ensuring that, hey, is this all in the right period? What's kind of replacing an asset that maybe was damaged or destroyed versus a new expenditure. So many kind of pieces beyond just the cash flow and the basic operational perspective that go into that we do have to assess this against. What I will note is last year there were 2 comments reported in this report. There was a comment in 2020 about the timeliness of bank reconciliations. That comment was corrected in the current year, and that was kind of one of the big measuring sticks to say, hey, here was something that now, after all of the turnover in staff and so forth, where the current team was here for all of fiscal year 2021. So that was one where kind of from the commission's perspective, you wanted to see that comment be rectified, and it was. So I'm glad to be able to report back that yes, we followed up on that, and that has been kind of where it should be now over the course of 2021 and into the present. The fourth report that we issue is a management letter required by the Florida Auditor General. There's kind of a catch-all series of items. If there's any financial condition, red flags, we would have to report that here. There were no such items. There's also a section for any other observations, recommendations that we come across, not deficiencies per se, but more of an FYI or things that we want to communicate to ultimately help you all get better and be the best you can be. There was one comment that we had here new this year. The state did last summer modify some of their statutes related to impact fees and the use of impact fees. And one of the areas of focus there was on a requirement for impact fee dollars to be tracked, and recorded in a separate accounting fund. So our recommendation there just says, hey, when you're going through the budget process for fiscal year 23 this summer, to just get that pulled into a separate fund to have that additional transparency and clear accountability over the use of those impact fee dollars and the revenues that come in. And then our final report, we have to opine on the city's compliance with state statutes over investment activity and investment policies, and did note the city to be in compliance with that statute. So effectively, another clean report here. So to get into the numbers, if I can go forward this time, it worked before. Oh, all right. It might have been out back that moved it. So to look at the general fund, this is your fund balance, your assets minus liabilities. Again, the general fund being the primary operating fund of the city. Your total fund balance increased from about 16.6 by $1.5 million to 18.1 million as of 9/30/2021. And that's broken into a few different buckets on the financial statements, where basically at the top, looking at it visually, at the top you can't spend it. At the bottom you have kind of full flexibility to spend it on more or less any purpose. The restricted amounts of almost $5 million, that represents where there's external restrictions on the use of those funds. So that $4.8 million is pretty much split even between impact fees, so about $2.4 million that will be moving into that separate fund once you all split that out. And then another $2.5 million related to your infrastructure surtax dollars and that accumulated balance. So those are pulled out as restricted because there's external guidance on how those funds can be used. There were no funds that met the definition of committed. That would be kind of like restricted, but done so by the commission. And then the assigned represents anything earmarked. The big item here is what was appropriated in your fiscal year 2022 budget to be able to be spent out of reserves. And then the residual is that unassigned, where there's no external restrictions and no internal earmarkings either for those funds. On the next slide, which I think I need help in, there we go. On the next slide, looking at that assigned plus unassigned fund balance of about $13.3 million, what we like to do is compare that to what your expenditures in the general fund were to say, okay, how many months in reserves do you have? Looking at that measurement, you're at about 77% or a little over 9 months in reserves, about 5% increase from the prior year. There is a recommendation out there from the Government Finance Officers Association that recommends a bare minimum of 2 months or really at least 3 months for a coastal community when looking at this measurement. So as I shared with you all, in a vacuum, you look really strong, but the other factor to consider, which we'll get to here in a second, is the potential impact of kind of closing out the disaster recovery fund at some point in the future with the city's ultimate share of the overall impact from the storm, when you kind of say, okay, we're done with all of the recovery efforts, we've gotten all of our insurance reimbursements, all of our FEMA reimbursements, and what's left over. So on the next slide, we've got a 3-year trend looking at the disaster recovery fund. There's a snapshot of all of the revenue and expense activity. As you can see here, the biggest change from the prior year to the current year, I think, is looking at what your total fund balance was, where you now have a slight increase from the prior year. But what we added this year, basically looking at just those last 3 lines on this slide, is we have your restricted fund balance of about $24 million. That's what's in the disaster recovery fund, largely as cash, along with some amounts that are due from FEMA received shortly after year end. And we've kind of put that up against, okay, what's your debt balance on the bonds that were issued related to the hurricane, to say that, hey, if everything was done as of 9/30/2021, the dust had settled, and that was what you had left over, and here's what the debt balance was, you're about right now $5.8 million kind of in the hole looking at just at this point in time. So if we were to, again, close it all out, that $5.8 million is kind of what would come out of the general fund in that number we looked at on the prior slide, and bring you down more to about a 40% reserve, much closer to that minimum recommendation, which I always like to remind is not a target, but a bare minimum recommendation when looking at that. So a lot of this is still going to be a work in progress to say, okay, how does this all shake out over the next couple of years, because we know FEMA takes a long time to process claims. They can be sticklers looking at what documentation is required, and I kind of always joke that until the money comes in the door, there's never full certainty over what are you going to get from FEMA. But this kind of just, I think, helps put it into perspective to say, hey, if we were done right now, everything was covered, where are we currently at? How are we pacing in terms of how much ground we have to hopefully make up as we see this continue to flip the other way, where hopefully going forward we see those reimbursements coming in the door be more than what you are spending out the door. So this kind of helps paint that picture and will give us something to track again as we go in future years and say hopefully that gap continues to narrow from that $5.8 million negative closer and closer to basically a break-even zero figure. We go to the next slide. Looking at your other governmental funds, very quickly, your CRA fund has about a $500,000 fund balance that is restricted, of course, for use within the CRA district. And for the second year this year, we did issue a separate audit report related to the CRA. The numbers are the same as what's in the city's audit report. It's really just a separate standalone report to meet state reporting requirements, but it also does include an additional report related to the use of the CRA funds, where we did include an opinion that the CRA fund expenditures were spent in accordance with the CRA documents and applicable state statutes. Your non-major governmental funds, your debt service, you've got about $15,000 in there, and then the disaster relief nonprofit entity that was closed out, brought down to a zero fund balance as of the end of the fiscal year. On the next slide, we have a quick look at your governmental activities. This kind of really rolls together largely your general fund and disaster recovery fund onto a full accrual basis to say, okay, let's look at your unrestricted net position as kind of that bottom line figure to say when you back out all of your capital items, long-term debt items, what do you have left over? And this is one where looking at just the number, there's so many non-cash liabilities and other kind of accounting requirements where I don't look so much at the number here, but just the trend to say, okay, are we trending in a positive or negative direction looking at that bottom line unrestricted net position number? As you can see here, you had about a $2 million positive swing on fiscal year 2020, so things were starting to move in the right direction when you looked at it in totality between the general fund, the disaster recovery fund, and debt repayments, and a substantial jump to the tune of about a positive $7 million change to the positive this year. So absolutely, again, what you want to see here, where it's all about moving in the right direction. It's not about one more day, 1 month, hey, all is well, we're done, we're where we need to get to, but it's a process to work through the recovery and the rebuild and kind of monitoring it to say, hey, are we going in that right direction, which these numbers definitely fall in line with what we've seen otherwise. Looking at your business type funds, looking at a similar measurement here of your unrestricted net position with a 3-year trend for all of those funds. Really here I kind of look at it in total because there are some transfers, for instance, from the water fund to stormwater to help keep everything a little bit more break even. But in total, those funds, a slight decrease when you add it all up together, but pretty much consistent from 2020 to 2021. And again, a lot of these fund activity as revenues continue to increase with more and more folks getting back on the system really will help paint that picture and give a baseline, another year or two to say, okay, where are we at as you identify future capital needs to take a look and say, okay, are the rates at an adequate position? But at this point, we kind of look at it and say, are there any red flags that we see? And there's nothing at this point. It's kind of a, hey, it looks to be kind of holding its own as it continues to ramp back up, and then we'll just keep an eye and continue to look at that and track it with this metric amongst others going forward. And then lastly, do want to talk about pensions as we do every year. Normally I say, hey, I want to talk about pensions because there's typically a huge number called the net pension liability on your financial statements. For you all actually this year, the net pension liability is zero, and all of those negatives on the slide represent what, from an accounting standpoint, are called net pension assets. And that, of course, is all of the pension plans did about a 20% return on the investment income, so a very strong year in the market for the fiscal year ended 9/30/2021. Kind of looking at it, most of those funded percentages are probably back down 5 to 10% since the way the market's performed the last couple of months. So I always kind of like to remind and share that the pensions are all about the long-term process. I kind of say you're never as bad as you look, but you're never as good as you look either. It's really about playing the long game, making wise decisions that will help keep the plan and the city in a strong financial position, not tomorrow, but in the next 10 years and the next 20 years. But overall, all of those plans trending in a very positive direction, in a healthy position. The only kind of item of note that I have is looking at those discount rates, where your general plan's about 7.5%, police and fire at 7.25%. We're not investment gurus, so I can't say, yes, this number is good or it's bad. But from what we kind of see just working with so many municipalities and pension plans is that most plans are generally trying to get to at least 7% from what we've typically seen. The state of Florida retirement system, they're at 6.8%. So many are going even below 7%. If those discount rates were changed, well, that immediately brings down your funded percentage a little bit, where maybe some of those come back down under 100%, but still would be in a strong position That's the only item kind of looking at the assumptions where, yeah, these are a little bit higher than what we see generally looking at governmental pension plans, and that would have that impact to say, hey, maybe they're not quite as highly funded as is presented here if some of those assumptions were to potentially be revisited. But again, those have been well managed over the years and continuing to be in a very strong position. So that covers most of the highlights. I'd be more than glad to entertain any questions, dive into anything further, or anything else.
Any questions from the commission?
I don't have any questions, just I'm sure that probably the reason I was the last person was probably because I had so many questions, but I appreciate your guys' time in doing this. I know one of the things I'd brought up in the past was the past auditors we had I was not impressed with, and would never use them again because they said we were good for 4 years, and we had the federal indictment, and then they wrote us up for a whole bunch of stuff, and I just feel like they were partially responsible for that. And I asked them a lot of questions pertaining to that, and I was very impressed with their answers. I was very happy with the numbers that I saw. One of the things I focused on was the debt. Before the hurricane happened, we had about $37.8 million of debt, and once you take off the disaster relief fund bond, we are definitely well below that $37.8 million, and I'm very happy with that so far, and I'm hoping that we can bring that number down even lower. So I appreciate you guys' time, appreciate the staff's time with everything, and I'm happy.
Any other questions, comments from the commission? All right, open the floor to the public. Any questions from the public? All right, any final comments from Zach or Ben? Thank you guys for your time. Thank you for spending time with us today. Phone calls and just all of what you have done. Thank you to our city manager and her staff for getting us back in order financially. It means a lot. And so thank you all for helping restore that trust in our financial system with the city of Lynn Haven. So and thank you guys for what you've done as well. Meeting adjourned.